Hi, today we're going to talk about reconciliations in QuickBooks, a very important feature of the software. However, I think it's sometimes underutilized by a number of companies. The reconciliation is important because it allows you to reduce the amount of data that you have to sort through for future reconciliations. And I'll show you what I mean by that in just a minute. It also makes sure that all the transactions for a particular period are recorded. And lastly, at the end of the reconciliation, you're able to print a report which provides documentation of all the transactions for a particular period of time. So I'm going to jump right in. Let me go to QuickBooks here, Online, and you go, in order to get to the reconciliation process, you go to Banking, and then More, and Reconcile. One key feature of QuickBooks, and this is not just online, all the QuickBooks versions, it allows you to be able to reconcile multiple accounts, not just bank accounts. You can reconcile payroll accounts, payroll liabilities, sales tax liabilities, and I think those are really important to reconcile, because you're sending reports to government agencies and you want to make sure that all those transactions for that report are accurate and agree with the report that ends up going out. So today I'm going to show you just a quick bank reconciliation. So you'll pick the bank account, and you can see all the different asset liability accounts are in here, and you're able to reconcile all of them. So you can use it for making sure that you've recorded all of your fixed assets, and you can reconcile all those accounts, which I would highly recommend. So today we're going to do the bank account, and the window pops up asking you for a statement date, and we're going to go with this statement, and it's 7/29. You put the ending closing balance here, and then the ending balance, and you always want to make sure that the opening balance agrees with the opening balance in your statement. If it doesn't, what that usually means is that you've reconciled it, and someone, an employee, someone else who has access, has changed one of those accounts that have reconciled, have already been previously reconciled, and that will in turn change your opening balance. So one of the key things you want to do when you first start is make sure that that beginning balance agrees, because if not, you won't be able to reconcile, or you'll have a difference when you're done. Ending balance 387.37. If you're reconciling a credit card, you may want to put in an interest charge if there is one, and that allows you to do that here. Or if it's a savings account, you can see interest earned here. We don't have that, no interest here, so I'm just going to click OK. And what that'll do is that'll bring up all the transactions for that particular period of time, that statement. Sometimes if things aren't booked properly, you may find that something's not on here, but it actually is in QuickBooks. In order to see all the transactions, you would unclick this box here, and it'll show, as you can see, it's showing considerable more transactions. It actually shows all of them that have never been reconciled. And that's one of the key features. So if you reconcile this, the transactions no longer show up here. So if you reconcile from the beginning of time, from the start of your company, every single month, all you're going to see is the transactions for that month, which I think is very, very important. It makes it very easy to reconcile in the future and sort through data. For example, you can tie out, as I mentioned before, sales tax filings, etc. So I'm going to check this back because I know that all these were recorded. And what you basically do, you're just going to go through and make sure that the items on your bank statement are also on in QuickBooks. So we got a deposit of $500, and then deposits are up to the top, and the checks and the payments are down at the bottom. So there's the 500, 250, 1050, 700, and 6,000. One of the cool things about the online version is all these transactions are clickable. So any of these amounts, I can quickly click on them and it'll take me right to the underlying transaction. Alright, so all the deposits are in. You can see the total deposits, 8,500, agrees with the total deposits on the bank statement. I'm going to go through, I know all these are booked, but I'm going to go through quickly and just show you some of them. So we have a check for $5,000, and looking through, here's your check, and so on and so forth. You'll just go through the entire statement until you've recorded all the transactions. If you're fairly confident that all the transactions are there, you can easily click select all, and it'll automatically check them all. And if you're right, you'll see that your cleared balance, which is items that you've all checked off up above, agrees with your ending balance. If not, there'll be a difference here. We agree, and so I'm going to go ahead and click finish. And here's your reconciliation report. Nice, neat report that shows you all the transactions that have cleared. I'm going to print this. To a PDF to save for documentation if I ever need to go back and see, like for example, if I went the next month to reconcile and my beginning balance didn't agree, I can come to this report, compare it to QuickBooks, and see what changed, because obviously this has everything. Close that, and we're done. I want to go ahead and show you now. So here's all these transactions from July. Now when I go back in to reconcile August, and there's our report, we select the bank account again, and now we put in August statement information. And you can see my beginning balance agrees with the ending balance from the statement I just did. Closing balance is 8,500, and the ending balance 141.18, and click OK. And now you can see the only thing that's in here are going to be my August transactions, because everything prior to that has been reconciled, and so it's a lot less data to go through. Now if this were 3 years into this and you hadn't reconciled previously, there would be 3 years worth of data to sort through and to verify. And so what this does is it cuts down on all the data to sort through. So if you filed sales tax returns for a number of years, you'll have all those transactions in there, and you may or may not know which, depending on if invoices have changed, dates have changed, the information in QuickBooks may not agree with your actual sales tax filings. So that's where this is key. You'll have a reconciliation report that agrees specifically with the sales tax filing. So again, I think it's very important to do this regularly. Let's just quickly see if all these are in here. And it looks like something's missing. So what I'll have to do is maybe show more transactions and see if I missed something, go through my bank statement to make sure I picked up everything. It could be a number of different things. And so that's going to conclude this recording. Thanks everyone.